You know, real estate investing, it can feel like this huge, gut-wrenching decision, right? So much uncertainty. But what if you could take that gut feeling and turn it into a clear, data-driven process? Well, that's exactly what we're going to break down today. Let's dive in and see how the pros turn all that chaos into total clarity.
All right, so picture this. You've done all the hard work, right? You've scoured the listings, you've walked through what feels like 100 properties, and you find one. The one. It just feels right. You can see the potential. But then, almost immediately, that excitement, it gets swamped by this huge wave of uncertainty. Now what? What do you actually do next?
And just like that, your mind is just racing with questions, isn't it? Is this a good price? Should I try to flip it for a quick buck, or should I hold on to it as a rental? What are the real costs here, the ones hiding under the surface? And of course, the big one, the one that keeps you up at night. What if my numbers are just plain wrong? This right here, this is the investor's dilemma. It's this storm of questions that can leave you totally stuck in analysis paralysis.
But here's the good news. There is absolutely a way to bring some order to that chaos. The key is to have a system to move step by step from all that raw data, your inputs, to a clear, confident decision. It's really about building a guide for yourself, a framework that you can use on any property you look at.
So I want you to think about this process like a deal simulator. And look, this is not just some simple little calculator where you punch in a few numbers. No way. This is a full-on decision-making engine. Its job is to take all your assumptions and model a bunch of different financial futures for that property. It shows you the potential outcomes before you ever have to sign on that dotted line.
And this whole process, it really just breaks down into 3 simple stages. Super straightforward. First, you feed it the key inputs, the stuff you already know or can get a good estimate on, like the purchase price and your rehab budget. Second, the engine does the heavy lifting and simulates the outcomes. It builds out these complete financial models for whatever strategies you're thinking about. And third, you get a clear recommendation. A simple summary of the deal's strengths, its biggest risks, and a final verdict to help you decide.
Okay, so let's actually put this process to the test, right? Let's run a deal through it. The very first trial for any potential property is figuring out the different paths to profit. And this really comes down to a strategic choice between 2 very different goals. Are you chasing that quick, immediate profit, or are you in it to build long-term wealth?
This really lays out the fundamental trade-offs you have to make. A flip, that's a sprint. The whole goal is to squeeze as much profit as possible out of one single transaction. And your risk, it's all tied up in market timing and nailing that after-repair value, the ARV. A rental, on the other hand, that's a marathon. The goal is to build equity and generate steady, consistent cash flow year after year. Here, your risk totally shifts to things like vacancies or managing unexpected expenses. See, it's not about which one is better. It's about which path actually lines up with your goals as an investor.
Okay, now let's make this real. Let's look at the difference using actual numbers for the exact same property. With the fix and flip, you walk away with a nice $55,000 profit, and you get all your cash back out in about 6 to 9 months. Pretty great, right? But your ongoing cash flow is it's zero. Now look at the BRRRR strategy. That's buy, rehab, rent, refinance, repeat. It shows zero immediate profit. Why? Because all that value you created is now equity in the house. You might leave a little bit of cash in the deal, but now you have an asset that's paying you $350 every single month. See? One property, 2 completely different financial outcomes.
All right, so you've compared the paths and you've picked a strategy, but we're not done yet. Now comes the final trial, and this one is crucial. It's the stress test. This is where we separate the deals that only look good on paper from the ones that are actually built to last. You know, it's so easy to fall in love with a deal when you're looking at the best-case scenario numbers. Everything looks perfect. But what happens when the market shifts? What happens when your contractor opens up a wall and finds a huge unexpected problem? Look, the pros, they don't just plan for everything to go right. They plan for reality. So, let's say our simulation starts out looking amazing. It projects a fantastic flip profit of $62,000. I mean, that's the number that gets you really excited, right? You're already mentally spending that money. It feels like a total slam dunk.
But watch this. What if the market just softens a little bit, and your final sales price, your ARV, comes in just 5% lower than you planned? A tiny, totally realistic change. Boom. Just like that, your profit gets slashed down to $35,000. This is exactly why you have to understand how sensitive your deal is to things you can't even control. And this is how you get the full picture. A chart like this helps you visualize your margin of safety. You've got your best case profit, that's $62K, right at the top. But then you can see, plain as day, what a 15% rehab overrun does to it, and what that 5% drop in ARV does. This isn't about being negative, not at all. It's about knowing exactly where your deal breaks down. It lets you find your true margin for error before you ever commit a single dollar.
So, what's the reward for putting a deal through this whole gauntlet? Comparing strategies, stress testing all your numbers. The reward is ultimate clarity. You now have the power to walk in and make a confident, completely justifiable offer.
And let's be clear, the point of all this analysis isn't to get a simple yes or no from some piece of software. It's to give you a strategic summary that empowers you to make that final call.
A really great analysis is going to tell you 3 key things. First, it's going to highlight the deal's strengths. What's really working for it? Second, it's going to call out the risks and weak spots, the things you uncovered during that stress test. And maybe most importantly, it's going to give you conditions for success. It might say something like, hey, this deal doesn't work at the current asking price, but it becomes a great deal at a purchase price of $220,000. Suddenly, your analysis isn't just a report, it's a powerful tool for negotiation.
This quote really says it all. When you can show up to a seller or a partner or a lender with a full data-backed analysis, your offer isn't just your personal opinion anymore. It's a logical conclusion. It's based on a clear set of facts and projections. And trust me, that completely changes the conversation and instantly makes you look like a pro. So, when you have that power to present a logical, data-backed case, the only real question left is the one you have to ask yourself. Is your next investment going to be a leap of faith? Something based on a gut feeling and a prayer that everything goes right? Or is it going to be a calculated decision, backed by data, by strategy, and with a crystal clear understanding of the risks involved? The choice, as they say, is yours.